Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on natural gas and UNG daily weekly time frame. I've switched over to NGV 2017 as the volume is picking up here and the volume in NGU is waning. So we have a couple different levels to be watching. The levels have changed a bit, only by, a penny or two. We're still watching this major resistance here, and that major resistance is where we've topped out multiple times. We've topped out here at 313.1, 314.2, 313.1. So those are major resistance levels, and if we get above those resistance levels, our target will be a gap here at 3294, as there is not much price history in terms of the all-out dump that we saw. So if we can get over those levels, there's some nice upside potential. That being said, we're nowhere near getting over those levels. The bulls are struggling again at this point, it's struggling at 304.2 and 303.5. So we're still seeing lower highs here, and unless that breaks, we're not going anywhere near that resistance I just pointed out. So we have our high, our pullback, which is a key support. The low of that candlestick was down at 2886. Our lower high, and the bulls are trying to form a higher low, but if we break 2886, it will be a lower high and a lower low, and we're looking back down at our low here. And looking at the weekly time frame, we are still very weak compared to where we were all of 2017. So we look back, 2017, we're at the lowest prices almost, just a couple of weeks here where we've seen this bounce attempt, which didn't really amount to much. And if we see a break of the lowest price we've seen in 2017, we're going to all of a sudden be back to where we were in April of 2016. So definitely significant weakness, and the bulls have not seen a solid bullish reversal candlestick get confirmed in a very long time since this pullback started back in early May. So the bears are in full control. That's the bottom line. And looking at the 4-hour time frame to try and change things to get a little bit more details, but it really is down to those daily levels, looking at the low $3 range. And if they don't break, you can see we just made a bear break on the 4-hour time frame. We've got higher lows, bulls are trying here, and then a bear break to end the week. So it's all bears. Bulls will have clear signs of getting over 304.2 resistance if they're going to start to turn things around. UNG in a channel here, trading sideways with some lower highs and some higher lows. So the key support is 641. Key resistance is 669 and 672. And we'll be watching which breaks first. We've been in this channel now at this point for about 2-3 weeks. And the inventory report did not give the bulls the momentum they needed to break these lower highs. We topped out yet again. If we see a bear break, there's a gap down here to be watching at 635. If we see a bull break, we'll be looking up at 695. And I certainly don't expect a bull break to just occur in one fell swoop in one day here, because there's a lot of upside needed to take out a lot of resistance levels. The weekly time frame has been struggling at exponential resistance, and just lower highs and lower lows has been the main course of action over the last 3-4 months. So topping out our high, our low, lower high, and we will see a lower low if we break that 620 level. On the verge of a bullish MACD cross, but we're going to have to break those lower high resistances in order to see that play out. So the trend is definitely bearish. The energy sector has been very beat up. We have individual energy names getting very beat up. And right now, there is no sign of the natural gas bulls turning that around anytime soon. We will certainly be keeping an eye out for it, but until the trend changes, bear is the direction to be looking. So I appreciate you watching. I hope you have a good rest of your weekend, and we'll continue to check in the commodities space.